The bullish outlook for the US dollar is still valid. Demand for the US currency remains buoyant as the world is braced for the worst crisis for a few decades. Investors are focused on the US non-farm payrolls, which could provide support to the US dollar. Fragile optimism in stock markets is waning. Fresh news on a growing pandemic rate in the United States wrecked hopes for stabilization. Today, the Dow Jones halted its climb. The index tumbled in the New York trade. Meanwhile, the US dollar index is trading firmly higher, having gained 0.7% today. It opened the New York trade at near 99.60. However, the Fed Reserve capped the US dollar's rally. Appetite for cash savings was moderated as the US Fed pumped more dollars into the global market. The US dollar is buoyed by its safe haven features as investors are seeking shelter amid market turbulence. Donald Trump warned Americans of the 2 painful weeks ahead as the coronavirus pandemic is set to reach its peak. The first evidence of economic damage has been already mirrored in economic data. Besides, analysts downgrade economic forecasts. On Tuesday, Goldman Sachs slashed the US GDP forecast for the second quarter to 34% in annual terms. The economic calendar today is packed with the fundamental data. Traders are assessing an employment report from the ADP payroll processor. The report enables traders to judge the extent of the crisis in the labor market. ADP reported that the US private sector lost 27,000 jobs in March. The figure is not as appealing as the expected 150,000 lost jobs. Besides, traders are alert to the manufacturing PMI and the manufacturing employment index from the Institute for Supply Management. The consensus assumed weak data, so investors were braced for the choppy market. The USD CAD pair has seen climbing today in light of a downbeat GDP for Canada. The data is of no importance to the market, but it proves the weakness of Canada's economy. The data for March is likely to be much worse. In the evening trade, the loonie regained some losses. To sum up, the USD CAD pair has shot 13% to 1.46 from January lows at near 1.30. The pair stabilized at around 1.40 for a while, but later traders increased long positions. The next long-term upward target could be at 1.57, the level last seen in 2002. Oil quotes have got stuck at multi-year lows, so the Canadian dollar has to adjust for the new reality. That's all for today. We wish you profitable deals and take care. See you tomorrow.